that was a kind of almost a mental leap. So money is technology plus a social, political, mental concept. And you roll forward to today, people are like, I have this, we have this, new form of, call it blockchain technology. We have also, more importantly, this very hyper digital world we live in.
Yes.
The world you've grown up in and I've spent a lot of my life in is hyper digital. It's very different to the world our parents or grandparents grew up in.
Welcome to the Encrypted podcast, your gateway to the future of technology and innovation, right here in the heart of Dubai's dynamic tech universe. I'm your host, Maria Vovchok, and together with Dubai Blockchain Center, we are embarking on a journey that unravels the minds of tech visionaries through the digital frontiers that are shaping our world. Hello and welcome everyone to Encrypted podcast. I'm your host, Maria Vovchok, and today we're really happy to have here Ronit Ghose, who's the global head of the Citi's Future of Finance team, a think tank focused on the future of tech, money, and finance and its interaction. Ronit's reports on Fintech and Web3 are among the most read reports Citi has ever published. He's the lead author of Citi's cutting-edge GPS Fintech Report series. He's also an advisory board member at the Center for Financial Technology at Imperial College Business School and sits on the advisory board of various technology startups and venture capital firms in the UK, in the Middle East, and Africa. Ronit is an industry chair, Future of Finance at the MENA Fintech Association, as he is also an author of Future of Money, a book on the past, present, and future money told through the stories of entrepreneurs, builders, and investors from around the world. Ronit is also an advisory board member at several tech and VC firms and one of the leading also universities based in London, Dubai, Cape Town. Many years ago, Ronit worked in the policy world, including being a bag carrier for a former UK Prime Minister, which is also so interesting. When he has free time, Ronit loves cycling with his family. Ronit, is that correct?
Pretty good. And I loved how you said my name, by the way.
Oh, yeah, thank you. Ronit, you're actually a perfect example of a banker who went crypto. So in the past, if you would tell anyone that bankers love crypto, somebody would say you are insane.
Yeah.
But in your case, you're someone who loves crypto. If anyone like 10 years ago would tell you that you would be learning more about decentralized digital assets, what would you tell to those people?
Sure. First of all, you got to think about what banking is.
Yeah.
And so often people think there's banking and it's kind of this very traditional, boring business. And then there's this decentralized business called crypto. Mm-hmm. And actually it's a spectrum, it's a range. And within what we call banking or traditional finance, there's lots and lots of different parts of it. So the bit that I'm going to age myself now, from the late 90s have been part of, or used to be part of, was the capital markets side of banking. So you think about banking, what does banking do? Or what is money? Money is a way to count. It's a way to count. It's a way to exchange value.
Yeah.
And it's a way to store value. Now, depending on which bit of the money chain you're in, you're going to have different type of people and different ways of thinking and behaving. If you're in the bit of money which is, how do I keep money safe?
Okay.
How do I keep it in custody or protect it? I open a bank account for you, and then I look after that money. It's about preservation. Then you're naturally going to be of a conservative or cautious mindset. Then there's the other bits of money, which is how do I move money, but also how do I make money? And how do I transfer these assets of value, capital markets? And a lot of the behavior, the institutions, the culture of crypto was preceded in the capital markets.
Okay.
These were people who were traders. They were the degens of their time. So the traders I used to deal with in the 1990s or the 2000s were as much degens as the crypto bros of
Crypto
today.
punks.
Yeah. So it's kind of funny because if you see centuries of history or even decades of financial history, I've only lived decades, not centuries, but if you see that, you can see the same patterns repeating. There were always people, the original venture capitalists. Who were the original venture capitalists? Or how did the stock exchanges start? They kind of started in the 1500s, 1600s in Europe, where there was Italian sailors funded by Spanish queens or Dutch business people coming together to fund ventures. They would basically say, look, we want to fund a venture that's going to go, in this case, a ship that will go sailing around the world. And when the ship comes back, it will carry back profits. And I'll get a share of that as the investor. That's how carry starts in, basically carried interest. Which we use in the VC world. Crypto VCs talk about a tradition. So actually a lot of finance, when you go back, and that's one of the things we talk about in the book, is there's a lot of amazing innovation. And this idea of, a lot of traditional bankers look at crypto and go, that's all magic money. It's all made up. If you think about what fiat is, so by fiat we mean what we consider traditional money, the fiat money we've had since the 1970s is unlike the money we used to have for most of our civilization. For most of our civilization, money used to be, here's a banknote, it's linked to a gold coin or a silver coin or a bronze coin.
Until it was linked to the precious metals.
It was always linked to precious metals for most of history until the 70s. There was a brief period, we talk about it in the book, there's a brief period in the late 1200s in China and the 1300s when that link was broken. So fiat money begins in China in the late 1200s. But the money we have today, fiat money, it's actually magic money. It's made up. We've all, as a community, agreed it's got value. And what's the value? We trust, in some, not all, in some cases, the issuer of that note. So in the dollar or the dirham here, which is obviously linked to the dollar, we trust the state. But it's a belief, it's an imagination. Just like people say, oh, how do I value this meme coin? It's a community that come together and say, I believe in this meme, or I think it's fun. It's just for fun, or it's a community token. In a way, what is fiat? It's like a community token as well.
So in this case, we can say it only depends on what kind of value you put into this meme token or any other either fiat or crypto. But when you actually think from this perspective, as bankers call it magic money, so-called, when we're talking about crypto, it's for the first time ever, it's totally different issuance. It's totally different from the perspective of, it's also, there's no central body that it governs the issuance of that one. So I'm really curious as well, as we can see how, we'll definitely talk, by the way, about your book, because it's also interesting to look into this from the historical perspective. But also right now, more and more we can see that banks are kind of competing with crypto. Can we say that? And can we see that they still see this as a threat? That's why they're really hostile to crypto. And from your perspective, since you're a banker who went crypto, I would call you like that.
I get what you're saying. Inside a bank, most of my career, I was an analyst. So what did an analyst do? We basically analyzed markets, companies, assets, and said, this is what it's worth. This is what we think it's going to be worth. So we were looking at traded assets. We weren't really, so in that part of the bank, there are a lot of people who are, is this asset going up in value or down in value? And the assets can be, it can be gold, it can be silver, it can be equities, it can be bonds. For me, digital assets, which is the banker speak for crypto, and more than, but it's, let's say the bank, that's just part of that spectrum. Now, the way I look at it, how crypto and digital assets and traditional money fit together, this idea of a spectrum is going to make me unpopular with both the Bitcoin maximalists and the crypto natives, or some of the crypto natives, crowd and some of the traditional banking crowd, because they'll be like, the way I think about it is, think about it in terms of food. Okay, just bear with me, this analogy.
Okay.
So I'm a vegetarian, okay? So what does that mean? I don't eat meat or fish, but I have dairy. So if you're a real vegan, like a true believer,
but
you don't have...
vegetarian is not exactly vegan.
Exactly. So if you're a vegan, you look at me and go,
what are you eating?
What are you doing? Why are you having milk and dairy and, whatever, and eggs? And you look at me and go, ugh, no. And if you're a meat eater, you look at me and go, this is weird. And I think fiat maximalists and crypto maximalists look at my thesis and go, the same. What are you? Make up your mind. And I'm like, no, it's like a spectrum. Like, if you want to eat meat, fine. I'm not going to... If you don't want to eat dairy and eggs, fine. But it's actually all a spectrum. Now, let me just go into this in a bit more detail. So what I'm saying is that in banks or in the financial world, there are plenty of people in traditional institutions, and they're obviously part of this big theme, the institutions are coming, right?
Yes.
Like, what's driven crypto prices in the last 6 months? The biggest theme are the whole institutions are coming. Yes, there's the Bitcoin halving. Yes, there's the risk on in tech stocks, or some tech stocks. There's a general risk on in the market.
Bitcoin ETF, everybody was expecting.
It's Bitcoin ETF.
Right now, everyone is talking about Ethereum ETF,
exactly.
if that's possible.
But if there hadn't been this Bitcoin ETF and / institutions are coming trend, or even meme, would we have had this rally we've had in not just Bitcoin, but in everything else? Or not everything else, but a lot of other, particularly Solana-based coins? I don't think so. So a lot of what you'd call traditional financial institutions are looking to add digital assets to this range. Now, what holds traditional financial institutions back is that in many countries, now we're doing this, we're filming this in Dubai, we have VARA down the road, DIFC, ADGM. They all have rule books in place, or growing rule books for how to deal with digital assets. The biggest challenge for traditional financial institutions is that in many countries, there aren't rule books in place or the approval from the regulators to get involved in crypto. And like all the new technologies, all new business areas, there are, there's scams, there's, stupidity, all kinds of nonsense happen, as well as interesting projects and great technology. And when there's all of this kind of noise and scammy activity, and you have the regulator saying, we're not going to give you a rule book, a lot of traditional bankers go, I don't want to be involved. When you have now here in the UAE, or you're seeing in Hong Kong, I was in Hong Kong last week, Hong Kong are trying to put in place, the policymakers there, a framework to make Hong Kong a Web3 friendly city. Hong Kong, in a way, is...
It was like until probably 2019.
Hong Kong is one of the ideal homes, in a way, of crypto, right?
What about Dubai right now?
So many people talk about Dubai, not just for crypto, but in general, as, in some ways, Hong Kong 2.0.
Okay.
Dubai has the kind of energy and excitement and growth and enthusiasm and new people moving in that Hong Kong used to have 10, 15 years ago, crypto or non-crypto. But Dubai and Hong Kong have that same kind of trader gene.
Okay.
They're like trader cities. They're, so is London. There are, to some extent, so is New York. These are different cities to, Washington. Washington is a government city. It's a cap. Or it's like in India, I would say Mumbai and Bangalore versus a Delhi. There are certain cities that are
more
trader
open.
Cities, marketplace cities, and there are other cities that are institution, the kind of the tower, the palace type city.
So in this case,
Dubai is not a palace city. It's a trader city. We have palaces here too, but it's a marketplace city.
mm-hmm. So in this case, you're saying that all of the cities, they're much more open towards new technologies. In the case we're talking about the money, new forms of money. That's one of the things.
New technologies, but also new people, new ideas. This is not just about technology, whether it's crypto, digital assets, or just in general. Money is a combination of technology.
This time.
People, no, always time.
If you think about it, like when we are going to talk about history, we could see there was no technology for many centuries when we talked about money.
But hang on, how do we when does paper money arrive?
Yeah.
So before you have paper money, you have coins,
Before you had stones, you have different
shells, beads.
Shells,
But think about paper money. Paper money starts between 600 and 800 AD. Where? In China. Why in China? They invent the technology of printing. So that's a technology.
Okay, I get you.
That's a technology. So if you invent printing, the chances are you're going to print banknotes. If you don't know how to do printing, you're not going to be able to do banknotes. I know it sounds like that's not high tech, but in 600 to 800 AD, that was pretty high tech. So there's a technology aspect, and there's always through time then there's a political or social or mental aspect to money. And you get printing in 600 to 800 AD, but then you get fiat money arrive late 1200 in China. Nowhere, it starts in China. Why? Because they want to fight a war. So the king wants to fight, the great Khan wants to fight a war. He doesn't have enough bronze coins or gold coins in his treasury. So he goes, just print paper money.
I see.
And that's how we get fiat money.
Okay.
And there's a chapter where I have the title say, use this paper money or I will kill you.
Oh.
So that's how you enforce, because people were like, what's this paper money? Before paper money, there were pictures of coins, and there were actually coins sitting in a merchant's safe or treasury. There were coins that people would come and deposit, and they would get these receipts, and they became paper money. And then a few hundred years later, the ruler goes, I don't even need the coins in the safe. I'm just going to print paper money. And I'm the king, and if you don't use this, well, I'll kill you. And guess what? People began to use it because, it's a pretty effective way of having enforcement. And that carried on for a couple of generations, and then it died off because there was inflation and there was lack of governance, and then they brought back asset-based money. But that was a kind of almost a mental leap. So money is technology plus a social, political, mental concept. And you roll forward to today, people are like, I have this, we have this, new form of, call it blockchain technology. We have also, more importantly, this very hyper digital world we live in.
Yes.
The world you've grown up in and I've spent a lot of my life in is hyper digital. It's very different to the world our parents or grandparents grew up in. The world our grandparents grew up in was more of a physical world.
Yeah, that's true. Dubai, home for innovations. The only thing I would like to go back to the topic when we were talking about banks / crypto. And if we go back just a few decades ago, banks were much more open. First, they also did not want to embrace fintech startups. And they saw them, they were a bit hostile to them. Over the time, they started even acquire those fintech startups. They could help them to be relevant, to offer new products to their clients. The same thing we could actually right now see with crypto. So on the one hand, they're really let's say traditional bankers, not like you, because you might be a bit different from traditional bankers. They might be a bit more hostile towards crypto, but at the same time, they're right now using blockchain technology. But in this case, to create centralized central bank digital currencies, not
Yeah.
exactly decentralized cryptocurrencies as we know them. So in this case, it was really interesting for me as well to know that you, in one of your previous interviews, you called CBDCs their Trojan horse for blockchain adoption.
Yeah.
Can you please share this with us today?
Sure.
And how did it come up? And explain this term. How do you see that?
CBDCs are interesting. So CBDCs are central bank digital currencies, which can be blockchain based or can be actually on a centralized database. It doesn't have to be. It can be on a programmable database. But CBDCs are the product of central banks and government institutions reacting to a world where they've sort of lost control. It comes both in China and in the Western world, and it's a reaction to what's called big tech, i.e. big technology companies becoming very dominant in parts of our lives. So CBDCs have been probably in pilot or in research around the longest in China. There are other countries, particularly smaller countries, where CBDCs are already nationwide live, but at scale, I think China is the really interesting one. So why did the Chinese authorities want to do CBDCs? What happened 20 years ago, sorry, I'm going back a bit of time, but 20 years ago, the consumer internet's taking off. And in China, Alipay, at the time, obviously desktop internet based, is trying to solve the problem of e-commerce payments and e-commerce fulfillment, which is if I'm buying something online in this massive country from another part of China, I don't know who the seller is. I don't know the quality of the good. So I have a social trust problem. So what Alipay set up is an escrow account. An escrow account is like the oldest kind of legal banking thing around, where basically someone you trust, a lawyer or someone, will hold your money until both parties agree that the money can be dispersed. In this case, I buy something, from you from another part of the country. I send the money, it goes to the central repository, Alipay, and then I get the product. Oh, I agree, this is a good product. And I say, Ali, products is received, it's good. Ali then sends the money. So go forward 10 years, this goes on to mobile phones. This is approximately. And mobile phone point of sale payments explode. And Alipay and WeChat Pay control point of sale payments. Not control, dominate is a better word. But I remember being in 2017, 2018, in different parts of Eastern China. I remember in 2018, I was in Hangzhou, where Alibaba is based. I was one of the very few non-Chinese people speaking at their conference, their annual sales conference. I came off stage, and I hadn't eaten before I went on stage because I was like, I was talking about China in a global context with Chinese people. I was like, this is like selling, I don't know, snow to Eskimos. What am I going to tell them that they don't know? So I was kind of, on edge, nervous, did my talk, came off stage, survived, and then I went looking for food. And I'm trying to buy food. And there's pictures. I can't speak Chinese, but there's pictures I can point. But they're not accepting my MasterCard anywhere or my Amex. I was in Dubai already, so I had a Dubai issued MasterCard and a UK issued Amex. I couldn't pay because you could only pay with Alipay. And that was obviously one particular example, but this was happening across China by 2016, 17. Now the government or the policymakers' response to this is, we should have a state alternative at point of sale. So that's how they began doing it. This is one of the reasons, not the only reason. They began to do CBDCs. There's also other reasons to do with efficiency, all kinds of reasons. Now, that's in China. In the West, the trigger was Facebook. So Facebook launched a project called initially Libra, and then it was rebranded DM.
No. It was DM, but rebranded, if I'm not mistaken.
It was Libra, rebranded DM.
Oh, yeah, you're right.
Yeah.
But it did not succeed, obviously, because of regulations.
It didn't succeed itself, but it spawned lots of CBDC projects because...
You think that was because of Facebook Facebook's Libra,
100%.
banks wanted
Not
to.
banks, central banks.
Yes,
Now,
but if you analyze, for example,
Yeah.
in 2019, the US, they started already their digital dollar project, which didn't progress at the time.
yeah. So there are speeches, public speeches by central bank governors and deputy governors and very senior central bankers saying, when we saw Libra, this was our black ship moment. CBDCs is important because in many, if not most of these countries, the CBDCs are blockchain based. And in some of them, they're actually even public blockchain based. Now, if the central bank says, I'm going to experiment with or trial with this blockchain technology, they can't go and tell the commercial banks, you can't touch it. So remember what I said before about you could say in English, you say broad church, right? Within, it's not just one sect. It's not just one, within the bank, there'll be lots of people with different beliefs. And the folks who want to basically try blockchain technology will now be able to say, look, the central bank is trying it. So they'll go to their senior management or their board and say, no, this technology isn't just for degens who want to kill the banks or kill the government. This is the apex, the high point of the fiat money world, the temple on the hill. The central bank is saying, we're now trialing this. And they're like 90 or 100 or whatever, I don't know how many central banks in the world trialing it. Then there's an institution called BIS. And if your viewers don't know who BIS is, this is the central bank of central banks. The Bank of International Settlements, headquartered in Basel, now with a network around the world of innovation hubs. And they're doing all kinds of really interesting trials and projects. And how do I use blockchain payment for, blockchain technology for cross-border payment? Central bank here in the UAE is now part of one of these projects. And that's, once the central bank says, I'm using this technology, it's easier for the rest of the TradFi world to say, they're doing it. They're like the Pope or the cardinals or the high priests of fiat, right? They're doing it, or at least they're trialing it.
So in this case, we should try it as well.
We should try it as well.
Encrypted is your exclusive ticket to the epicenter of technological innovations in the MENA region. Let's focus on the book Future Money, the one that you actually issued.
Yeah. Oh.
So actually, I wanted, Future Money. First, if I'm not mistaken, it was supposed to be called Future of Money, right? How was it?
Yeah.
So you kind of like Future Money because you're actually focusing on the history, on the past, present, and future of money. You're discussing cryptocurrencies, DeFi, Web3, in this case, Fintech, Metaverse, AI, and actually so many interesting things. Like if everybody who would like to read it out, definitely check it out. Ronit Ghose, Future Money. But I would like in this case more specifically focus on Chapter 8 because it's really relevant to our our
8.
podcast. Yes, because we're talking about Chapter 8, where specifically it focuses on intersection AI and finance, emphasizing the analogy that if data is the new oil, and these are your words, finance is the Saudi Arabia of data. How do you see AI transforming financial industry, particularly when you're talking about leveraging data and information? And pay some examples, please.
Sure. So data is the new oil is now a term that's like, 15 or 20 years old. It got popularized in the last dozen years as data has exploded and the amount of data in the world keeps getting bigger. And I said, if data is the new oil or kind of newish oil, it's not really that new anymore, finance is the Saudi Arabia of this new world, because what industry is there, but other than the money industry, that's so data rich? Money or finance has an end product, which is hopefully socially relevant and valuable. Now, you can get a mortgage, you can go and spend, and spending becomes easier by having, whatever form of payment you're using. Or you can save for future spending, or you can borrow for current. Money has an end product, but most of the kind of inside finance, what is it? It's not like, it's just you're playing with data. And in the last 50 years, 60 years, And in America, UK, and probably France, it started in the late 50s, early 60s, computerization. In other parts of the world, it started in the 1990s, 2000. If you're looking at, say, some parts of the Mediterranean or India, it was like 1990s. Finance has become one of the most heavily computerized industries. Now, because finance in the last 10, 15 years has been a laggard, we think of finance as, or TradFi as like boring or old, but actually finance was one of the earliest adopters of technology in the computer age. Where did computers start? Late 50s, early 60s. Who has the money or the resources to buy and use computers in America? NASA, the space agency, the military, and banks. And it was the same in the UK and France. So from very early on, finance was very heavily computerized. Now, that meant there's been a huge amount of data that sits inside these companies. And that's what I was talking about is in that chapter about finance like the Saudi Arabia of data. It's just, it's like the most data-rich place. And then AI is a natural, if it's so much data, AI is a natural place to use the data.
The most, like, let's say, the best use cases of implementing AI into finance, in your perspective?
Yeah. So if I can just add on a kind of another qualification, what I just said is AI, in a way, is naturally useful in finance, but it's also hard to use in finance because there's so much tech debt in finance. There's so much old technology and old data. So actually making it useful for AI is hard. What are the best use cases? So it depends on where you are in the timeline. In 2024 and 2025, a big focus inside finance is how do we improve the productivity of finance? So like the obvious one that everyone uses now in examples, if you're a consultant, will be code generation, coding. Do we need as many coders going forward? Banks have tens of thousands, big banks have tens of thousands of technology staff, sometimes 20, 30,000. Do we need less of them? More likely what's going to happen is that there'll be more work for those coders to do.
So do you think AI will replace them?
AI won't replace them. AI will change their roles. So if you do a particular task, which is very basic, whether it's code generation, whether it's text, natural language, not coding, just you're writing reports, like in my old job as an analyst, or in an internal role, you're writing credit memos, or if you're doing basic use of words, like text, basic use of language, basic use of code, yeah, the machine's going to replace you. But then likelihood is that you're doing that basic use of whatever as an entry-level job. And as you get more senior, you're doing more analysis, you're doing more supervision and checking rather than the basic entry level. So the challenge is going to be, we're going to need fewer of these basic entry-level roles. Where do the new graduates go, or the new high school leavers go, right? What kind of jobs do they have? So the type of jobs will change. I don't think the number of jobs is going to dramatically go down. And of course, we don't know where we're going to be with this technology in 5 or 10 years' time. So maybe the technology improves so dramatically that we can't actually imagine now. So some people will say, Ronit, we don't know. So how can you make a definitive conclusion now? So yeah, there's that issue as well. But I think we tend to overestimate, it's a old saying, we tend to overestimate the impact of change in the short term and underestimate in the long term. So in the short term, I don't think whatever job you're doing is going to disappear, but there are some roles and tasks that are already under threat. But who does it help? Big picture question from an industry dynamic perspective is startups, smaller companies, more agile incumbents, more forward-thinking established companies, because if you adopt this technology, you can get ahead of your competition. So you're seeing in the capital markets world, many of the hedge funds adopt this technology faster than many of the traditional long-only or pension funds.
Because in their case, they have to like trade, especially if they like active trading.
Yeah,
Actively trading.
It could be that they're doing high active trading. Also, it's because they have lots of budget. They have a lot, because this thing, any new technology, but including AI, costs a lot of money and risk appetite. You have to have either the intrinsic risk appetite or the lack of external heavy constraints, because they are often less regulated hedge funds than big banks. So the lack of external constraints, but also the intrinsic, I want to go and take that risk, that kind of mentality. So you have to have the right kind of, culture or the DNA, the right stuff, and money.
Yeah.
So they tend to have more of the right stuff.
Thank you. Thank you so much, Ronit. Right now, we're going to our rapid fire questions. Stay tuned with Encrypted. Rapid fire questions. So if you had to explain crypto to a child, how would you do this in one sentence?
It's a kind of digital money based on blockchain technology.
Name 5 qualities that you believe a real entrepreneur should have.
5 qualities.
Yes.
You only need one.
Okay.
Determination, 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 determination.
Okay, 5 times. What would you never do while building a company?
What would you never do while building a company? There's so many things you should never do, but
Just very few.
I don't know.
The time is really precious here.
Yeah. What would I never do while building a company? Don't give up.
Okay. The moment that you're the most proud of in your career? There's so many.
The career's been too long. I think whenever I find something new.
Okay.
Whenever I find something new and interesting.
The moment you would like to forget?
The moment that I like to forget. I've forgotten it.
Okay.
I've forgotten it. Does that work? That's an answer.
Finish the sentence. My business philosophy is?
My business philosophy is keep going and have fun.
Oh, nice. How often do you practice your keynote speech before going on a stage?
Depends. If I've done a similar speech before, I don't practice very much. I just look at the audience and think, how do I need to modify and tailor it for the audience? If I haven't done that speech before, then you should take time to prepare.
If you go back in time or in the future, which era would you like to visit and why?
So many. Like take one, just because I was there in December, Medici, Florence.
Oh, amazing. Okay.
Because finance, art, beauty, money, all being created at the same time. There's so many places I'd like to go to.
What are you working on right now when you have free time?
It's a secret.
Okay, but you cannot share right now. Is it a new book?
Oh,
something else?
My wife said no new books this year.
Okay.
She said no new books, but no new books this year. Takes too much time. Yeah, this takes time.
Of
this
course.
takes time. Yeah.
The next big trend to follow.
You know, I wouldn't say just follow one trend. It's not about trend. It's about mindset. Keep an open mind. Keep an open mind. We don't know what the trend's going to be. Keep an open mind.
What's your personal formula for success?
Do something you enjoy.
Amazing.
Otherwise, you're going to give up.
Dubai.
It's all about keep going. You have to keep going. So you've got to enjoy it.
Oh, that's really nice. Dubai for you is associated with?
The future.
Amazing. Today we had Ronit Ghose, Global Head of Citi's Future Finance Team, and a banking analyst who went crypto. Thank you so much, Ronit, for joining us.
Thank you for having me.
Thank you.
Thank you.
See you next time. From the gleaming skyscrapers of Dubai to the innovation hubs of the Middle East and beyond, Encrypted brings you thought-provoking discussions, exclusive insights, and stories of innovation that will leave you inspired.